In midweek and midday trade, the major U.S. stock averages are attempting to claw above the flat level. Joining me now is Peter Cardillo of First Standard Financial. Peter, good afternoon. Thanks for joining me.
Good to be back.
Well, as we all know, the major U.S. stock averages hit record highs in the previous session. Now, given everything that's happening in terms of fundamentals as well as central bank expectations, where do we go from here?
Well, right now it's very difficult to fight this tape. The market basically is moving up on momentum buying. It's discounting a lot of factors. And I think, somewhere along the line we're going to be headed for a very severe correction. There's no question in my mind that that's going to come about. Basically the market is up a little over 10% since the elections, and of course it's up also on good fundamentals. The earnings season certainly has been good and certainly indicates that there's a turnaround in the profits growth, and of course the economy continues to move along. So there are bases for it, but I think the market is too complacent at this time, and there's no volatility. Everything seems to be going according to a very smooth ride here, but eventually that will turn.
Peter, as you mentioned, we are starting to hear adjectives such as toppy or frothy or even bubbly when we're talking about the U.S. equity markets. But as you mentioned, there are risks up ahead. And therefore, I want to shift our focus on over to the Eurozone. Now, if we look at the currency or currency options markets, we're starting to see some of the jitters regarding the upcoming French election starting to come into effect. So how are you squaring away these risks?
Well, I think, in order to protect yourself, you should have some gold in your portfolio. I think that would be a hedge against the euro probably falling below parity, against obviously the French elections and a general decline in the stock market. Now, I know you can make the case and say, well, if that happens, the dollar is going to strengthen. We could probably see the dollar index go beyond 105, and that would be somewhat negative for gold. But I don't think in this particular case it would be a negative for gold because, again, we would be dealing with probably the prospects of the Eurozone disintegrating, and so that is the single currency disintegrating. And so I think that would be the positive aspect for holding gold in lieu of a stronger U.S. currency. In this afternoon's FMOC minutes, there's a good chance that we might see an indication that the Fed could move as early as March. But I think it's already baked in the market in the sense that the Fed has been very hawkish for a long time now. They've indicated 3 rate hikes this year, and that has not really budged the market at all. So I don't think it's a question of interest rates. I think it's a question of an over enthusiastic crowd in the marketplace.
Okay, Peter, as always, thank you so much for insight and thanks for your time today.
Thank you.